Welcome to the Wizards of Dalal Street, 35 years. I'm talking with two of Dalal Street's best and brightest, Duregsh Shah of Corporate Database and Vinod Sethi, the former MD of Morgan Stanley. Gentlemen, welcome to this very special show.
Thank you, Ramesh.
Let me start back in the 1980s, 35 years back. The BSE Sensex was 100 and a great bull market ensued over the next 35 years. Index is closer to 30,000 now. But the foundation of that bull market was laid by an unlikely character. The father of the bull market, the law of unintended consequences, was who, Duregsh bhai?
I think you have to go back to 75.
The Janata government had come into power.
The emergency.
Right.
It almost killed the stock market.
Right.
You had a situation where very few stocks were traded. The youngsters at the exchange would go for movies. This is what I was told. I was not there, but I was told that it would go for matinee show of movies during the market hours because there was nothing that was traded. There were dividend freezes and all kinds of things. So coming out of that, you had the Janata government, and George Fernandez wanted to Indianize in some form or shape the foreign companies. So he gave them an option. You either sell part of your shares to the Indian investors or you go back to your country, leave India. Few companies like Coca-Cola, IBM decided to go back. But many of them, like Colgate and Lever and Nestle, decided to dilute. There was an authority called the Controller of Capital Issues who decided on what would be the price of dilution. Those were amazingly cheap valuations. So that actually triggered a big boom into the Indian markets. All the employees of these companies realized that what they were getting was very, very attractive. Indians never understood dividend payouts till they saw these companies pay out crazily. I remember Colgate would give a bonus issue whenever the book value touched 28, because again there was a restriction at which you could capitalize the reserves.
Right.
So that you can then increase the dividend. So it was an unbelievable situation.
Vinod, 1989, no Indian was coming to the market. You were an Indian in New York and you were bullish on India?
Yes. We thought that India was at the cusp of a sociological change. That among many things, we truly believed that capitalism had sort of won the Cold War with the Berlin Wall coming down.
It was that big headline?
Yeah, it was like a one-line summary in a sense that capitalism had won the Cold War, if you will. So that, at the end of the day, was our belief that things were ridiculously cheap. What Duregsh said was absolutely true. I think in India you were also getting multinationals very cheap on the market. So there were some absolute benchmarks too. But at the heart of it, we felt that India was in the midst of a change.
But I take him forward to a few years, again around the 89 period, India actually had to send its gold and mortgage its gold to get foreign exchange reserve.
Correct.
The height of a crisis, was that the buying opportunity?
Yes. In fact, if you look at history, all crises have been buying opportunities in India. You look at such points, you look at tragic times like even Rajiv Gandhi's assassination, unfortunate assassination, and so on and so forth. The crises have been turning points in India.
Right. In the 80s, of course, a lot of other things happened. We had the first bull market, we had a telecom boom, we had Rajiv Gandhi speak on the need of transforming India into the digital age. Did you catch any of those themes as you were a student in those years, Duregsh?
We did catch those themes, but I wouldn't say that it was a top-down approach. We were able to identify Vindhya Telelinks and Phenolics Cable, those companies who benefited out of those cable companies, which actually was for the telecom sector at that time. So we did make money out of those. I remember that in 1986, the index came down from 664 to 390 in 1988. But these were stocks that went up 5 times. So we could make money in a falling market.
You know, the first commonly accepted value investor in India was a gentleman now deceased called Chandrakant Sampat. Tell me a little bit about him.
I think Chandrakant Sampat was much ahead of his time. He used to not only read the general publications, but he was a guy who talked to us about OID, which not even many foreigners knew about. And
Outstanding Investor
Outstanding
Digest.
Investor Digest. You talk about Janu's style of investing, and
Warren Buffett.
Of course, Warren Buffett. Up to the year 1992, I think he got it really right. In fact, it was an amazing thing that when you read about buy stocks when there is blood on the street, here was a guy in 1984, the day Indira Gandhi was assassinated. There were riots in Delhi. We were young guys running down on the 27th floor stock exchange, coming down, not knowing what's the future of our careers. And we meet this man and ask him, "Kya lagta hai?" And here this guy is telling us, buy Myco, which is Bosch today. And we stunned that we didn't expect him to tell us what to buy. We thought, what will happen to the country? So we said, but you know that. So he said, yeah, I know. It is sad that Indira Gandhi has died,
Yes.
but she can die only once. And you won't get Myco at this price ever again. So the guy really had some kind of temperament.
And he also explained compounding better than anybody else at that stage in the market.
He could explain compounding, he was able to explain margins, saying that if there is sugar even in a vault, an ant will manage to get there. Similarly, if there is any margin that any business has, competition will come in from anywhere. So never dare to expect margins to survive at very high levels.
We'll take a break, come back and chat some more with Duregsh Shah and Vinod Sethi on the Wizards of Dalal Street season finale.